What is up, my Wall Street wolves and crypto kingpins? It is your friendly neighborhood trader, Joseph Watson, here at the Current of Currencies podcast, and I'm here for your daily market update for January 24th, 2022. If this is your first time viewing, I'd love for you to go check out the first episode of this so that you have an understanding of the news and charting that I'm going to be doing for you guys and why I'm doing it. It's a key importance in learning what you are trying to learn in the investment and trading space. I'd also like to remind everyone that I am not a financial advisor, nor is anybody who works for me on my platform. We are only giving out paper trading advice, which is hypothetical situations of us buying and selling stocks, equities, and cryptocurrencies. Thank you. So today, before we get to news, I want to talk a lot about market sentiment and also market psychology. These are two factors that you need to have on lock if you want to be a serious investor or trader. Now, again, I created this channel because 90% of investors fail. That is an honest fact. I'm sure you've heard friends, family members who've told you they've lost money in the markets, and especially this year with how chaotic things have gotten. Now, one of my biggest quells with this space are influencers, teachers, and especially just YouTubers in general screaming the word HODL. HODL, hold on for dear life. A lot of influencers are teaching people to do something as well called dollar cost averaging. Now, these two things a couple years ago would have been an extremely practical thing to use in the cryptocurrency space, and in some cases, it is still a very practical thing to use in the traditional market sense. The one thing that I would say is that it all depends on your own capitalization. Now, for someone who's making, let's say, $150,000 to $200,000 a year and wants to build a serious portfolio where they're hedging against many different things with whatever they're interested in, I feel that dollar cost averaging and hodling is a wonderful technique that could definitely get you secure profits and has great risk mitigation factors. This is where I have an issue because most of the people, especially in the last year and a half, that have gotten into the space are not well-capitalized investors, especially when we're talking about cryptocurrencies. I cannot explain to you how many friends I've had in the last 2 years who have DCA'd and hodled, made unfathomable fortunes, and at this point are still holding and have lost really anywhere from 50 to 70% of their potential realized profits just over the last couple months. Hodling right now in such a volatile space is not practical, nor is it really ethical. Now, my favorite example to give to people is between the last two all-time highs of Bitcoin, we saw a floor of about 29,500. This was when so many retail buyers flooded into the space and started dollar cost averaging and hodling. They were getting their paychecks, and every week or two, they would put all of their profits and throw it into Bitcoin. And there was so much hype about Bitcoin that it was so hard to talk to people about when they were going to realize their profits. 90% of investors fail because they don't know when to take profits. It's as simple as that. So if you look at it, they were spending more and more money on Bitcoin as the price went up, and the price action only goes up so high, so fast for so long. So when we did hit our new all-time high of 69,000, they didn't know when to sell. And there was so much talk of Bitcoin going to 100,000 that it was even harder for them to make the practical decision of selling. And look where we're at now. We are in a range of a $34,000 Bitcoin, and I still don't think that we've hit a floor. I'm not a financial advisor, though. Now, these are perfect examples of market sentiment and market psychology. The market sentiment was we're going to the moon, and at one point or another, that just wasn't the case. The market psychology was hodl, because even if we lose all of our money for whatever reason of why you would want to do that, we can wait another couple years and make our money back. Now, to me, that makes no sense, especially if you're not well capitalized. You are throwing yourself into something called a negative sum liquidity pool. You dollar cost averaged all the way up, and then the price fell underneath the average that you bought in on, and you are in a negative sum. It's as simple as that. Now, would you rather learn how to trade and take profits so that you can get that liquidity back and move your money around how you want? Or do you want to wait 2 years for a bear market to end so that you can regain those all-time highs and realize your profits? What sounds better to you? Now, that story is a perfect example of market sentiment and market psychology. The market sentiment was, we're going to the moon, and that just wasn't the case. This was fueled by influencers that were just being irresponsible or trying to grow their channels. And some of the biggest influencers in the space, for lack of better words, are just pieces of shit. I'm sorry, it's the truth. And I got something for you meme stock, hype coin, and NFT vultures. So if you watched my video yesterday, you would remember me mentioning that in a sustained downtrend that ends on Friday in the American markets typically continues on a Monday when they open. And that's exactly what happened. In this case, we saw the S&P take another 6% dip before it hit a dead cat bounce reaction rally. Now, this is a rally that typically people try to catch falling knives on and then make quick profits on, but I am still expecting another dip in the time coming, as the indicators haven't showed me that we have seen a floor yet. Reaction rallies happen after these large dumps, and that's in every market. Be wary of them, because while they look good now, watch what happens tomorrow when the markets open. We might just see another continuation of the crash, and that's something seriously to take into consideration. Now, following up on the Russian news from yesterday, the U.S. has officially declared a statement for all of its ambassadors and citizens to exit Ukraine, as they believe that Russia will soon make its move. Again, I am absolutely terrified to see the effect that this will have in economic sanctions, potential war, and also how it will affect our markets when the dominoes start to fall. In the American markets, the dominoes have already started to fall. As you can see today, we've seen another extreme dip, and we'll be covering some of that in the charts that we're going to be looking at in our next section. I can't tell you enough that this is a critical moment in not only American history, but world history, and we need to hedge ourselves against what is about to happen. So, with that being said, let's look at the charts. So, as per usual, we're going to start out with the Fear and Greed Index. And just like I was saying yesterday, we are starting to see a trickle-down effect. About a week ago, we were at 58. Yesterday, we were at 43. Now we're currently at 41. And after the market we saw today, I'm not surprised I'm actually surprised it's not lower, really. Let's get right into it, really. So, I'm going to keep it simple. If you guys know what the TSI, RSI, MACD is, I'm not going to explain them. Again, I'm going to do indicator videos on each indicator so that everybody has an understanding of what I'm trying to look at. But these three, besides the RSI, if these bands are open and going down, it means that we're probably still going to keep going down. And if they are upwards and open, it means that they're probably still going to go up. You can see it in these charts when they're divergence indicators, to put simply, if you understand what that means. These ribbons that we have here, along with this blue line, are moving averages. They're exponential moving averages. There are different types of moving averages. I'd also suggest you look into that yourselves. But this gives us a grand spectrum of kind of support and resistance levels that we're dealing with. So as you see, price drops into them, kind of bounces out of them as time goes on, and we get price action because of it. Now, this 200-day moving average is the most important. This signifies if you are in a bull or bear market. And one reason of why today, and let me move to the 1 hour chart, we saw such a rip downwards in the Dow Jones, give my computer a second, is because, again, from 19 days ago, we had hit a low of 10.32%. That is, again, just horrifying. Now, what I was talking about in the dead cat reaction rallies is this reaction that you're seeing here. When we see large falls like that, typically when we get to our first, I don't want to say floor because we're not sure that this is the floor yet, we will see a pullback, and then as you can see, we're moving up into these EMA ribbons, and also this blue line that I have is called the Keltner channel. It's another form of resistance support band. I will get to it in a video when I can. Trying to pump out stuff as soon as possible, honestly. But we are now starting to tap into these EMA ribbons. Now, if we keep moving up, I can tell you that we are going to see major resistance when we get to the darker ribbons. So this is definitely something to watch, and why I say I think this is just a dead cat bounce reaction rally. In the next couple days, we could see this price action continue to move down. Again, this is why we watch charts every day. So let's look at the S&P. Again, these bars are support and resistance levels. As you can see, price action has ping-ponged off of these, and there are great points of consolidation at these levels. They're not perfect. Just take them into consideration when trading, and it will always help you out. The more information and confirmations that you can get as a trader, the stronger your strategy will be. That's why yesterday, when you saw all of my indicators that I look at, it looks like a mad mess. So let's go and look at the 1 hour for the S&P. Right now we're sitting at 44.10 at close. And again, going right into this EMA ribbon. And I'm just going to be watching to see if it's going to ping pong off of this and continue its movement down. That's, you know, from our top here now, and this is even scarier than the Dow Jones, because again, this is the top 500 companies in America right now. At the floor, we saw almost 12.5%. Now, again, this does not happen often. If you're new to this does not happen often. Just to look back on a weekly with the S&P, we were in one of the hugest rips that we've seen in the history of the S&P ever, and that from just the start of it, we saw 117%. And as you can also see, there's not many pullbacks on this scale that have happened previous to this. Gold futures looking strong. Will we test up past the 1844 mark? I'm gonna say yes, and I'm not a financial advisor, but always bullish on gold. Great, just a great asset to hold in your portfolio in general. But that's not financial advice. So we only paper trade. Buy bars, don't buy the notes. That's one of the things that I will tell you. Same thing with oil. It's very interesting because I see a descending channel, and my lines aren't going to be perfect, so bear with me. Right about here. Now, If we break to the downside, obviously we're going to go down. And if we break to the upside, then we're going to go up. But typically, when the price is consolidating in a downward movement, as long as we stay over this 200-day moving average, we will most likely go down. Or we will most likely go up. Right now, we are literally at closing under the 200-day moving average, or no, we didn't close yet. We are at the 200-day moving average, so I'm going to be heavily watching this to see if it breaks out of its channel or just what kind of price action it's going to have. I don't own any oil futures right now. It's more so just a great indicator that tracks other world markets because oil is used for everything. I'm sure you know. Moving to the crypto fear and greed index, we continue to go lower, and I'm sure the YouTubers that I was talking about today are screaming their head off of to the moon and be greedy when others are fearful. And this is what our total market cap is looking like right now. This is an hourly chart, by the way. 20% from just 4 days ago. So I'm not really feeling it. And again, until I see a reversal in Bitcoin or Ethereum, I'm bearish for now and looking for very short-term trading opportunities. Total market cap 2 is excluding Bitcoin. And again, I'm kind of waiting for it to fall in this box, and that's where I'm thinking that we're going to see a reversal. But it's largely dependent on what the rest of the world markets do. And of course, the geopolitical issues that I've been talking about, not only in Russia, but in China as well. Bitcoin is not looking too good, guys. We are officially in a death cross. From the top, we are at minus 47%, and again, that EMA ribbon is nice and spread right now. We're at the bottom of our Keltner channel, but at the same time, we haven't been getting some really nice reactions. This is the day. If we move back to the hour, we will see that reaction rally that I was talking about, ping-ponged right off of the 200-day moving average, and just took a nice dump. We all like taking nice dumps. When we're doing shorts, get your mind out of the gutter. And we saw a movement of about 24%. So again, this is specifically why I am bearish on cryptocurrencies right now. And the same can be said with Ethereum, I'm sure. From its last all-time high to this point, we have seen roughly, again, a 50% move downwards, moving into the 1 hour to see if there are any reversals on the horizon. Again, it's not looking too good. There's just a lot going on in the space right now. In the last 4.5 days, we'll say, we have seen a 26% drop, and I will be tracking this day and night as crypto is my main hedge to see when a reversal will happen. It's just really not looking good. As you can see, we're going up into these EMA ribbons right now, center of our Keltner channel, and it kind of just looks like there was a double top right here, move down, move back up. So, you know, you could definitely make some nice short play or short-term plays. I don't mean shorts specifically, but as for long holds and hodls, get it out of your mind. It's just not, it's not going to happen right now. So lastly, of course, we're going to look at whale wallets, and I'm going to try to do it a little bit cleaner today. That's what I promised myself with the entire video. Wow, a lot of action today. We saw 24 million transferred from an unknown wallet to Binance, and that's BUSD, so maybe someone looking to buy. We saw 658 Bitcoins move to Coinbase, which is not a good sign. We also saw 25 million transferred from Binance to an unknown wallet. So it doesn't look like there's some buying action with that wallet. BUSD 50 million transferred from FTX to an unknown wallet. Again, it's all getting taken off at this point. Just like I had mentioned, the price action is just really not looking good right now. Another 50 transferred from FTX to an unknown wallet. So that's 2. That's 100 million. We saw 100 million BUSD transferred from unknown wallet to Binance. So very interesting. That could potentially be some buyers. 25 million USDT transferred from Binance to an unknown wallet. Never hold Tether. Unless your contracts are traded in Tether, never hold Tether. Just a very sketchy company in the space right now. Too much going on with them. Again, not financial advice, just my personal opinion. 100 million Binance from Binance to an unknown wallet. Again, just seems like the sentiment is we're not buying anything. The whales aren't buying anything. We got PAX, 250 million transferred from FTX to an unknown wallet. Seems like most of this is flowing off today. 100 million BUSD transferred from unknown wallet to Binance. So that's 200 million that's going onto exchanges. So that kind of counterbalances a bit of what we saw today. 25 million PAX transferred from unknown wallet to Binance. Maybe they're going to sell. 1,500 Bitcoin transferred from unknown wallet to Coinbase. 1,250 Bitcoin from unknown wallet to Coinbase. That's not looking good. 54 million US dollar coins transferred from unknown wallet to FTX. So might be buying. 1,000 Bitcoin transferred from Coinbase to Binance. Probably just better price action happening there. 41 million USDT transferred to FTX. Somewhat good sign. 20 million USDT transferred from Kraken to an unknown wallet. So that's flow off. 9,700 ETH moved from an unknown wallet to FTX. Very concerning. 20 million USDT printed. Oh, don't worry about that one. About 35 million USDT transferred from Bitfinex to an unknown wallet, flow off. 100 million USDT transferred from an unknown wallet to OKEX. Interesting. 1,000 Bitcoin transferred from unknown wallet to Bitbank. Again, seems like a lot of Bitcoins flowing into these exchanges right now. That would probably be my biggest warning sign, if anything. 1,925 Bitcoins from Coinbase to an unknown wallet. So maybe that was some price action happened today. But then next was another 1,000 transferred from an unknown wallet to Coinbase. And by the way, these aren't all the same wallets. Just something to let you guys know. Or at least I would need to look at the wallet IDs to figure out if they are. This could all be the same person, but I just am not willing to do that research right now and for the channel. 2,000 Bitcoin from Bitstamp to Binance, so it looks like they're going to sell better price action on to Binance. 11,000 ETH from an unknown wallet to Huobi. I think the point is that there's a lot of coins flowing onto exchanges today. So again, bearish in my opinion, especially in the crypto space. Let's look at how the next couple days goes. I am Joseph Watson. This is the Current of Currencies podcast. If you like my content, if you like my message, if you like to be educated in finance and just controlling your money in a more strategic and optimized way, give me a like, subscribe, tick the little bell. Just help me out with the YouTube algorithm so I can get my message out and save people more money, especially us retail investors. Now, I will be back tomorrow. I'm probably going to be doing a later video. Try to check it out in the morning before the markets open. And I hope you guys all have a wonderful night. I am about to catch a wave out of here.